Hey traders, Jason here from Leavitt Brothers. Hope you're well. So let's do an update on my State of the Market series. First, quick reminder, my Masterclass in trading is available at a link below this video. It's the class I wish I had when I got started trading. It's the class I wish I had a year after I got started because it would have helped me get over the hump and accelerate my progress. I've gotten a lot of good feedback. It can be a game changer for you. Check it out. All right. Let's talk about the market. The mega cap stocks are doing well. Semiconductors have gone on a great run. Software is much improved. Several indexes are at or near all-time highs. It's the kind of market that if you're in the right stuff, you're doing well. But if you're in the wrong stuff, you're hurting pretty badly. So let's analyze the state of things. First, I'm going to go through the indexes. Then I'm going to check out the market's breadth to get a glimpse of what's going on beneath the surface. All right, let's get to it. All right, so first up, this is the S&P 500 weekly. Pretty simple. Got a nice trend here. Big drop when COVID first broke out. Recovery, consolidation pattern, and now we have a pretty good and steady trend up. Support from the weekly 21 here, 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 here. So the trend is up, the index is strong, it's at its highs, it has a pretty good cushion to work with. You can't be anything other than bullish on the S&P. Here's the daily. The picture is pretty much the same. Move up, consolidation, move up, and instead of having a consolidation pattern like this, we've had higher lows, higher highs, and then we had a resistance level here that it just broke through last week. So again, strong trend, index is doing great, big cushion to work with. You can argue that it's gone too much too fast and it needs to rest. That's fine, but you cannot be anything other than bullish the S&P. Here's the Nasdaq Weekly. Okay, nice move up here, drop in recovery, consolidation pattern here last fall, broke out. Now we have consolidation pattern here above its 21-week moving average. So things look good here. Maybe we'll get a double top here. I don't know, but I considered rally, pull back, do some backing and filling, and then another breakout. I mean, this is normal stuff for an uptrend, strong uptrending market. So the Nasdaq looks good. If I go to the daily, similar picture. We had a consolidation pattern here, which resolved to the upside. A consolidation pattern here, which resolved to the upside. So even if we get some backing and filling here, back to the previous resistance level, back to maybe the 21-day moving average, that'd be fine. I don't know if a double top will form, but as of right now, I view this as a strong trend. Came down to the double bottom, and now the trend is resuming itself. So bullish on the Nasdaq overall. Now here's the Russell 2000 small caps. Russell 2000 small caps. I'm using IWM because StockCharts.com doesn't have the Russell chart anymore. So the Russell lagged over here, suffered a huge drop, but then recovered. We got support from the 21, support from the 21, support from the 21. And then at the end of last year, beginning of this year, the small caps did incredibly well. And for the last couple months, we've been just trading in a range. Okay, nothing wrong with this. We got a high, a low here, a low here, a high here, another low here, basically in the middle of the range. There's nothing wrong with this. Okay, I view it as the index moved up with force. Now it's been moving sideways for a couple months. Nothing wrong with this picture overall. Here's the daily. Okay, so just to highlight this, all we got is we have an index which has been unchanged going back to like early February. Okay, nothing wrong with trading neutral and and being in the middle of a range. Okay, markets don't always go up or down. They could spend a lot of time going sideways. So I don't think there's anything wrong with this. Obviously, it's lagging the other indexes, but by itself, there's nothing wrong with having a big rally followed by a couple months of consolidation. All right, now let's look at some breadth, see what's going on beneath the surface. All right, so here is the S&P 500 up top with the NYSE AD line. So this is the 10-day moving average of the AD line, the 20-day moving average of the AD line, and the 50-day moving average of the AD line. So characteristic of an uptrend is you're going to get just some up and down movement with occasional dips below, as long as those dips are not too far below, and as long as those dips recover, the uptrend is supported, and that's exactly what we have here. With the 20-day moving average, we have it, rolling up and down above zero, which is exactly what you want to see. Dips, to zero are good. Dips a little bit below zero are fine. As long as you don't get a big dip, you're fine. And then the 50-day moving average of the NYSE AD line is at a decent level. Okay, it sat at a high level over here, and now it's rolling up and down at a slightly lower level, but that slightly lower level is still, at a pretty good level. So NYSE looks good. The moving average of the AD line on all, in all looks really good. I see no warnings here. And because of this, you have the cumulative AD line, which just continues to trend up and recently hit a new high. Now, here is the Nasdaq versus the Nasdaq 80 volume line. Okay, so the AD line lets all stocks talk equally. It doesn't matter if you're Apple or you're some small, $200 million company that all count equal. With the AD volume line, stocks that trade more volume have more influence. Stocks that trade less volume have less influence. It's still not perfect because an expensive stock like Google or Amazon trades less volume than a smaller company, but it's still a pretty good gauge. So what we have here is the Nasdaq AD volume line. This is the 10-day moving average, 20-day moving average, 50-day moving average. So this right here was a 20-day high, and this right here was nearly a 52-week low, nearly the lowest level since the March bottom. And then we got a recovery, and now it's just kind of sitting up here above zero. So it's up, which is good, but I can't say it's like acting really positively. You'd want something like this, and then recovery up to here. With the Nasdaq getting close to its high, you'd want more of a recovery up to here. It's not happening. With the 20-day moving average of the 80 volume line, it's a similar thing. Like you'd expect, you can see how like this trend here, look at how this did this. And then we got like a dip, and then it recovered, and a dip and recovered. This is this is fine. It dipped and recovered, but you'd expect this to like maintain a higher level, not drop down to zero here, given that the Nasdaq itself is, has been trending up for a couple of weeks. So a little bit of a warning here. And then the 50-day moving average of the AD volume line has been trending down for 2 months. Okay, so another kind of warning here. It's not drastic, it's not horrible, but it definitely tells us that there's some weakness beneath the surface at the Nasdaq. This also shows through at the Nasdaq, the cumulative Nasdaq AD volume line, where the trend is still up, but there's no question that this is flattened out. Okay, which is pretty much what the index has done also. Okay, so but if you look, more recently, we're in a nice 2-week uptrend, but we haven't had a whole lot of progress right here. So nothing drastic, nothing urgent, but I can definitely say that there's a little bit of weakness starting to seep in. And if you don't view it as weakness, you could just simply say that there's less strength apparent, less strength there. Moving on to the next one, you have the S&P 500 up top with the NYSE new highs and the Nasdaq new highs. Okay, with the NYSE, we're getting a pretty good print, pretty much near the middle of the range. What you want to see in an uptrend is just oscillating just like this. New highs just up and down, up and down, up and down, and up and down, and down. As long as they're up and down within a range, it's perfectly fine. You don't need high prints. As long as you just get expansion, contraction, you're perfectly fine. As long as you don't get like really low prints, or as long as it doesn't get stuck at a low level like it was here, we're pretty much good. And this is exactly what we're getting. So NYSE looks good. Nasdaq is a little bit different story because we have a very obvious lower high here and then another very obvious lower high here, even though the Nasdaq keeps pressing higher. Actually, that's the S&P. And then right now today we have a very low print. Okay, so it kind of makes you wonder. The Nasdaq is doing okay. The S&P is at a new high, and yet new highs at the Nasdaq have been trending down for like 2 months. Okay, so it is a little bit of a concern. There's definitely the NYSE is definitely strong, and the Nasdaq is doing okay, but it seems to be weakening. Okay, if I look a little bit deeper, this is the large cap new highs, mid cap new highs, small cap new highs. What you typically get is you get good prints, you get a drop and then recovery, you know, drop, recovery, drop, recovery. That's perfectly fine, okay, as the market, you know, trends up, drops, and then recovers. That's perfectly fine as long as you get the recovery. Okay, so what we've had here is a drop, recovery, and then, rally, drop, and then recovery. And we got a drop here and recovery. We got a drop here and recovery. We got a drop here, and there's no recovery with the small caps. Okay, so mid cap new highs are doing well, large cap new highs doing well, small cap new highs have not expanded. So there's definitely some weakness among the small caps. And then here are the NYSE new lows and the Nasdaq new lows. So the NYSE new lows, I mean, this is not a high print, but it is the highest print since over here. Okay, so for some reason, even though the S&P is pressing higher day after day after day, it's posted a gain almost every day for almost 3 weeks, and on several of the days it's posted an all-time high. New lows are ticking up a little bit, not a big deal yet, but it's something to keep an eye on. New lows at the Nasdaq, even though the Nasdaq itself has been on a pretty nice 2-week run, it also ticked up. Today it's back down. Okay, nothing urgent here, just something to keep an eye on. You definitely don't want to see new lows slowly and quietly creeping up while the market is moving up, because eventually the market is going to suffer a big drop. Not a big drop, but at least it's going to come down. The combination of new highs coming off and new lows ticking up a little bit has created a negative divergence with the S&P up top here, and this is the NYSE high low, and this is the Nasdaq high low, where we have a double divergence here. Okay, so at right here at the Nasdaq, you have at zero, you have basically equal number of new highs and new lows, even though the Nasdaq's been on a nice run and is pretty close to its all-time high. It's not as urgent here at the NYSE. We're still getting a pretty good print here, okay, but it's something to keep an eye on if this continues to drift lower. Okay, so again, we're told the NYSE is doing pretty well, and the Nasdaq definitely has some weakness seeping in. All right, next up is percentage of stocks above their moving average. So this is the percentage of S&P 500 stocks above their 20, above their 50, and above their 200. Okay, so characteristic of an uptrend is you get a lot of, you get rolling movement above zero with an occasional dip below, and then prints above zero and occasional dip below, and then lots of prints above zero and occasional dip below, prints above zero, little dip below. And so this is characteristic of an uptrend. Everything looks good. Right now we have 88% of S&P stocks above their 20s. That's great. Analyzing with the 50-day moving average is exactly the same. We have 93% of S&P stocks above their 50-day moving average, and we have this is like 97% of S&P 500 stocks above their 200-day moving average. So the S&P is definitely strong. Okay, here's the S&P, higher highs, higher lows, been trending up for many months, and the percentage of stocks above their 20s, above their 50s, above their 200s all support this. This is the Nasdaq versus the percentage of Nasdaq 100 stocks above their 50 and percentage of Nasdaq 100 stocks above their 200. Okay, so what we have here is we have a good print. Most stocks, we have 87% of NDX stocks are above their 200. We have 75% of NDX stocks above their 50s, and it's been improving for the last month. So things looks good there, and there's actually room for improvement. Okay, so not bad. Okay, the Nasdaq's doing well overall. We got double bottom here, but we have a good amount of stocks above each of these moving averages, so this seems support. Now, of course, this is the Nasdaq 100, which are going to be bigger, more established, higher quality companies. If we look a little bit deeper, we have Russell 3000 stocks above their 20. And you can see here we have a very obvious lower high in place. So this curve up here at top is the S&P 500, obviously doing very well, broke out recently. Right now it's at its all-time high, and yet only 54% of Russell 3000 stocks are above their 20-day moving average. 20-day moving average is not a very high bar to get over. So it is a little bit of a warning that somehow we have, well, not somehow, we know why it's happening. It's like we have the large cap stocks like Apple, Google, Amazon, Facebook. They're all doing incredibly well. They're pulling the market up. So everything looks good on the surface, but beneath the surface, when you consider the Russell 3000, you have almost half of the Russell 3000 is trading below its 20-day moving average. And here's the same situation with the 50-day moving average. So, lower high here, lower high here. Right now, only 64% of Russell 3000 stocks are above their 50-day moving average. That's a pretty low number considering the S&P is doing so well. Okay, so definitely a little bit of a warning. So if I were to summarize everything here, with the indexes, the S&P is strong. Okay, it's at a new high. The Nasdaq has double bottomed, broke out, and is getting stronger. It's getting close to its previous high. The Russell overall is just neutral. It's been trading in a range for the last 2 months. Nothing wrong with strong here, and neutral here. There's nothing wrong with that. The NYSE 80 line is strong, but the Nasdaq 80 volume line is getting weaker. Okay. NYSE new highs are doing fine, but the Nasdaq new highs have been trending lower. Okay, so the combination of this is NYSE strong, new highs doing fine, but Nasdaq 80 volume is weakening. Nasdaq new highs are trending lower, and then stocks above their moving averages. You have the S&P and the Nasdaq 100 are very supportive. You get most stocks are trading above their 20s and 50s, 200s, and such, but weakening at the Russell 3000, where you only have like 50 or 60% of stocks trading above these key moving averages. So it looks like the combination of all this stuff looks like there's some weakness in the Nas and there's some weakness in the small caps that are not allowing, say, the Russell 3000 to have better prints. Okay, so overall, big caps are doing well, but there's definitely some weakness, particularly with the small cap tech stocks, beneath the surface. So I don't know who's going to win the battle. Is the S&P going to pull everything up, or will small caps eventually pull the market down? So we'll see. My bias is to the long side, but we must make sure we're trading the right stuff, because if you're in the right stuff, okay, semiconductors have done well, software is doing much better, then you're doing fine. But if you happen to be positioned in the wrong stocks, you're getting killed right now. Okay, so you have to be positioned in the right stuff. Thanks for watching. See you next time, and don't forget to check out my masterclass.